The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, David White, the koala bear of Wall Street. Just out eating my eucalyptus leaves, being small and cuddly. Just minding my own business as the market tends to try to mow us all down with the incessant drumbeat of Alibaba. And when we look at that today, it's up 24 bucks. Not a real surprise. I thought maybe it'd go up to 76 or open at 76 today. And a few more people after the close last night decided to hang on to their shares, making the float even lighter out there. And what you have to understand, of course, is that SoftBank, the big cheese in Japan that owns a quarter of this, is not sold a share. We also see other people like Yahoo keeping a lot more shares, so it is going to be thinly traded. Most of these folks have signed up to a one-year lockup, and so expect, if as long as everybody just doesn't sell, the stock's probably going to hang up here. But of course, they're going to be in at 68 bucks a share if they bought it last night, and in at 50 cents if they bought it 7 years ago. So the question is, what and where does it go from here? And I'll probably stay clear. We talked about the reasons why. We'll bring it up again on the Tech Insider tonight. But I just don't think there's any reason to get involved. The risk is too big unless you're going to short this thing, and of course I wouldn't be shorting it today either. So you got some nice movement out here in the markets. I started adding positions, started adding them yesterday, added another one this morning in the daily newsletter. Had a pretty good opportunity in a sector that has been pretty poor for probably getting on 8 months since we started shorting it in the Tech Insider. And there was one stock that was just hanging up there like a fastball over the plate. So we took a swing on it yesterday. It's down $5. 450, let's call it 450 from our entry point already in a day. So I think we got a good entry on that. Had another good entry this morning, at least temporarily. The war is not over, let me put it that way. Now, of course, on the S&P cash, we're looking at 2010. We've got more volume than you would think on an expiration day, as at least starting the show, 2.4 billion shares. So we had a nice little spike out here, had a ton of volume come in. The high today was 2019-26 on the S&P cash. We've been kind of spiking and giving a lot of it back here over the last few days. A lot of this is expiration based, and it's not uncommon to see people having futures and being long the futures and want to spike them in the morning, and buying a lot of times SPY puts and wanting to see them down in the afternoon. So option expiration is always the yin and yang. The yin, of course, is at 9:35, or as soon as every one of the S&P stocks are open, they will set the futures expiration, and normally that's 9:35, so 5 minutes after the open. And then, of course, options expire at the close of the day, and that's all. Generally, a lot of options are out there, and they pump up the market during the week. It's not uncommon to see kind of a pullback like we're seeing. So pretty typical options expiration on Monday and Tuesday. We're going to have a little bit of options rollover, so look for a little bit more volatility. Wednesday we should be deep into the next trend, either up or down, depending on which one you like, but I think we're going to see that level somewhere around pretty much that time. Anyway, other things going on in the market, which is already in progress. Of course, Apple coming out with its phone today, and it's flat. Pretty amazing. Started seeing some negative articles coming out about Apple and people standing in line, which you don't hear very often. But I guess they didn't want to wait in line in the rain in New York City. So sometimes that doesn't work out. For the rest of the stuff, and what really amazed me, I put out my Tech Insider always on Friday. I got it out early because we started seeing signs of a lot of there's a couple of companies that basically tear apart the iPhones as soon as they can get a commercial iPhone that was sold. They'll pull it apart and then tell you what chips are in it and how to fix it. These companies online basically sell the tools to start pulling your iPhone and maybe your Samsung Galaxy apart. And when they do that, they document it, and it'll get a lot of traction. But then remind you, if you break your screen or if you do something else, we sell you all those wonderful tools to take it apart and fix it. And anyway, I tried to get the newsletter out as soon as I could this morning. But one of the things that we do now know is all the different stocks that are in the iPhone. And a couple of those down 5%. I'm not exactly sure what's going on, but we've talked about the suppliers not acting well in Apple a couple of times. Last time was when it was up at $700. There is the thought that they're going to ship so much product in the next quarter that the next quarter's probably locked in for these companies already. The real question is, what is the run rate after Apple gets all the people who want to stampede to getting their product? And kind of looking like at least traders today giving a no vote on a lot of iPhones being sold next year. I don't think that means this month, but stocks tend to look ahead 6 to 9 months, and you have to be a little troubled in the way that those semiconductor stocks that just now have been, what would you say, called golden. They're made stocks in the Apple mafia. Kind of interesting to see those stocks do what they're doing. Look at Cypress, Triquint. Some of those stocks pretty nasty looking. We'll try to look at those later in the show. Of course, as always, we like to start out with a little histoire. On this day in 1974, the U.S. Secretary of Treasury, William Simpson, predicts the interest rates, then around 8%, will soon fall. The Dow leaps 3.4% on the day on good news. Over the next 7 years, interest rates proceed to double, and even worse, housing rates can go up to somewhere around 6%. Andy says he would like to call into the show, so we can take him, I imagine, in the next segment. I don't have a great deal of news. I'm going to get into charts. But Andy and I have been IMing back and forth, and we'll take his call as soon as he is ready. But we've been talking about, I think we said it yesterday or the day before, just how horribly a lot of junior miners are run, and whether or not they could survive gold being lower out here. Gold is off $11, kind of busted the support that it had at $12.25, which means we're probably going to see $11.80. And unfortunately, you would have loved to see this thing just come down to $1,200 and bounce off of it this morning, and then maybe that would have been it. And then close back above $12.25. Maybe you would have been able to find some kind of silver lining on the cloud. This drip, drip, drip of a paper cut of a market in gold makes me think that I might even be a little high on my downward projections. And getting a little nervous in that maybe I won't have the guts to buy this thing when the blood is in the streets. But we'll talk about that with Andy Heck in a little bit. Anyway, of course, famous last words from the Secretary of Treasury. And I thought I had one more thing. I did. I got more hate mail than just about anything I've talked about besides gold going lore. I get a lot of hate mail about that. But I got more hate mail when we started talking about GMOs a few weeks ago. And a lot of people gave me some tinfoil helmet links to people that didn't like GMOs for a variety of reasons. None of them I thought looked scientific. And what we actually someone should have given me this. So if you are a big GMO opponent out here, you want to look this up and read it, because it actually is a fairly decent argument on why we should treat GMOs a lot differently than we do. If you Google the precautionary principle with application to genetic modification of organisms, I think you're going to like what is in there. It is very tough to have any real argument. It's almost political. And this one actually is not so much evidence as a way of thinking. And the precautionary principle is actually a thing that some governments have in their constitution in Europe. We have Andy on the line here. We only have a minute and a half, so we'll probably take him also through the next segment. But go ahead, Andy. How you doing?
Hi, Dave. How are you?
Good.
So, big day with this Alibaba, huh?
I'm going to ignore it. It'll go away.
It'll go away, no question. But big day with silver.
You know what? They have lotions and ointments for that condition.
Zinc oxide. It's a commodity.
Zinc oxide.
See that?
Oh, did you ever see the film about zinc oxide in Kentucky Fried Movie?
Oh, you know what? I saw that so long ago. Probably.
You've got to go back and look at it.
I have to go back and do
zinc
research.
Zinc oxide and you.
I have to do some research.
You have to. That actually is a great film. It's a put up of all those films they used to show in high school. The kind of self-serving ones out here. So what you want to talk about? We're only got about a minute left here.
Well, we want to talk about gold and silver, really. I mean, silver, the action in silver, look, I've been kind of bearish on them for the last couple of weeks. The action in silver today, long-term support broken at 1850. I'm struggling with this chart to find the next level of support. I mean, it's looking like 1450 to me.
Well, I think I emailed you earlier that the problem I have was that this drip, drip, drip is worse than just what I was looking for, which is the washout. Because these drip, drip, drips are like paper cuts. They hurt like hell, and they never quit bleeding. You want to hang on? You want to hang on through the break? We'll come back and talk to Andy, because we've been IMing each other back and forth. Pithy comments. We've been pithy, very pithy. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, one of our wonderful listeners already found a link on YouTube to zinc oxide in you. I highly recommend it if you ever had to endure bad high school, what were they, like educational films. But it's hysterical, from probably one of the greatest movies of all time, Kentucky Fried Movie. And a little risque, but a great movie. Anyway, Andy, we're looking at gold here, and my thoughts are just the way it's acting. We've been bouncing IMs back and forth all week about how ugly this has been looking. Now, in the GLD, of course, I almost said maybe there's too many people in GLD, and maybe some of these big guys of Wall Street are going to have to get washed out, like Paulson. That's on the GLD on the ETF side, because they have to buy and sell gold. You're just looking at the gold contract itself, right?
I'm looking at I'm looking at the macro picture with the whole commodities sector.
Yeah.
With the stronger dollar. Look, we saw grains start the summer at big highs. They're down at 4-year lows. Today we have silver down at 4-year lows. Silver's tough for me. It's a very tough commodity to get your hands around, production costs, because 70% of all production comes from, concentrate production. There's only 30% of mainline not byproduct production there. So silver is very much a sentiment metal, and you're going to have to see physical buying here to come back to the market at these levels for this thing to see any support. Gold, which I'll pop a chart up there now. Gold, to me, man, has been a sitting duck for a while. And I think once, we head down to this 1185 support, we go through that, things could get very ugly very quickly. Like you said, it's been like a paper cut here, just lower lows every day.
I guess probably even if I go back to my patron saint of trading, Jesse Livermore, it was not the news, it was how the stock or the commodity acted and the reaction to the news. And you would pretty much think that after the Scottish vote, we probably should have been up $10 on gold today, not down.
I thought so. I thought that the dollar would give it up, but it was kind of a buy the rumor, sell the news kind of thing, I think. That's what seems to have happened here. But it's just the overall macro trend, Dave, and commodities are kind of out of favor here. And hanging on gold is still $1,215 an ounce. I spent most of my career watching it trade between $300 and $400 an ounce. Now, we're in a different time now. The paper currency is worth a lot less now. I understand the reason for having gold in the portfolio, but right now, this market just feels so heavy, and there's not enough bearish pundits out there talking it down. And that's why I think it's going to fall.
Well, we see that in the equity markets with basically lows that we haven't seen since the huge blow up in '87 on the equity side of the market. What do the commitment of traders look like on gold right now?
Well, gold open interest has dropped. Let's just put a shorter-term chart up here. It'll come out this afternoon, so I don't want to comment.
Yeah, that's what I was going to say. I thought that
on what it is. But look, we had open interest on July 10th of 417,000 contracts. Now we're at 384,000 contracts. The bottom line is that the investment sector doesn't seem to care about gold here.
I guess the other thing is, of course, in equities we're seeing a lot of problems because today is expiration, but we're looking at a December gold contract. There's really not a lot of activity that should be moving it other than probably the currencies and the underlying fundamentals of the metal itself, right?
Right. But what I've been saying for a long time is that silver is very cheap relative to gold. Platinum is very cheap relative to gold on a historical basis. So that means that either these metals are too cheap or gold is too expensive. And I think what we're going to find out is that gold is too expensive.
My point was that we can't give gold or silver's actions today a mulligan, because it's not like the equity market out here that can be pushed around quite a bit on expiration day.
Right.
For those things. There's nothing really that should be affecting it other than the fundamentals of the market itself.
Well, you could say that the dollar index is up 440 points, so gold should be down today.
But 42 cents,
yeah,
which is another thing that seems a little bizarre, doesn't it? Yeah. After the Scottish vote,
it does. Listen, the trend's your friend, and it's a status quo. As someone said in the den, is a continuation of the trend.
Yeah.
Anyway, thanks for taking my call.
Okay, thank you.
See you soon.
Bye.
Take care, buddy.
We'll be back in a minute. You can give me a call, like Andy, at 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, I think the last couple of days was a pretty good time to start setting hooks on equities. The index is probably going to be in the next couple of days. Maybe Monday, Tuesday, Wednesday. I like that we had the little spike in the S&P this morning, that it's all gone away. Of course, it is expiration day. So we might see a test of that again Monday or Tuesday. But my guess is that a lot of these stocks continue to look really, really weak. And I haven't seen a big change in the summation index that continues to make me see that this market is incredibly narrowly focused. I think that we've had about 3 weeks where the market's held up higher, basically trying to get this Alibaba IPO out the door and ring the register on Wall Street. They make a lot more money kicking out one of these IPOs, and over the year they will. There's a lot of reasons to hold this market up a little higher. Can a pullback last? That'll be a question. I think we saw from Yellen this week that she's not wanting to rock the boat. But the markets look ahead 6 months to 9 months. And the question is, in 6 months, well, we're here in the middle of September, so by March, are they going to be talking already about raising rates in June? And I think the answer is yes. I don't think it will be a whole lot. But everybody on the street pretty much knows what, and seen what I've seen, which is most of the looks or discussions talk about 1/3 of the S&P's profits are because of insanely low interest rates, and when those change, it will be problematic. Now, another thing that's problematic for me, and I wish today was an expiration day. Apple, of course, basically flat, but when we look at the supply chain for Apple, kind of, especially when we see a company like Qualcomm that can't get out of its way today, this thing also has had some bad news. Also China related. That's what that huge gap was back down on volume on the August 24th? August 24th? June 24th. July 24th. And that came down with some monstrous volume for the stock, which should be just gangbusters. 37.7 million shares on that date on, July 24th. Now that we see that we're getting into that today with 8 million shares, tells you just about everything. I mean, we even tried with 12 million shares back on August 21st, and it kind of went back and kind of going around. But kind of a sell the news kind of thing on some of these stocks, but some of them are downright ugly. We talked about CRUS, which is Cirrus Logic, and I tell you what, everything in the world out here says that these charts look pretty horrible in this space. I've been asking the question for a while, is the glut that Samsung's seeing the same one that Apple will? And it certainly looks like, at least today, the people are kind of thinking that maybe the best is in this high-end smartphone business that's sometimes called the superphone business, and the real money's going to be down on the ground level on the $100 phones. Cirrus Logic, when you look at this chart, it had everything that you wanted to see in a top. Came back down from the July 22nd high at $25. Had 2.4 million shares. Came back with fairly decent energy back to the August 7th low at 22.01. Got back up to 24.74. Could not get, it got into that candle for a brief minute that day on September 2nd, but only 750,000 shares. And I'm not saying that this thing's going to fall apart, but it certainly does not look good. And this is kind of the what I'm looking at in almost all the space, whether it be Android and or Samsung. I mean, Samsung, Android, and Apple. These things, you had a nice reversal looking day out here. Volume is not over for the day. We could have more volume than we had yesterday, which kind of set up a good test of that low, and we got 1 million shares already. That low doesn't have a lot of volume out here, August 7th. So it'd be easy to break that $22.01 low, and maybe we see that Monday or Tuesday out here. But certainly looks to me like a lot of these stocks kind of in pretty deep trouble if they continue going on. Another ugly one out here was TQNT. As I said, I got my my newsletter out, the Tech Insider Friday edition out. Normally we get it out in the afternoon, but I asked them to kick it out because I went through about the 13 companies that are supplying parts, and I thought everybody should know that up front right now, and what they were doing and what chips got in the iPhone. And that's going to be something you really want to keep an eye on going forward, because that is the lion's share of everything in semiconductors now. Not a whole lot of other stuff. People buying televisions, people buying smartphones. And that is tough to go out there and look at it. Anyway, Triquint off fairly decently. Nice little reversal day. On volume on it, too. And I think you can see some... weakness out there on Triquint, and it is I guess it is what it is, as they say. But not a good-looking little candle out here. I think you can go through the other 13, although we won't today, and start looking at it. But I think we've got a caller, so we'll try to look at some of the other stuff real quick. Apples, garlic, movers, and tests. We've got Dan from Irvine, California. How are you doing today, Dan?
Hi, Dave. This is Sam.
Oh, Sam. Okay.
Now, I just wanted to thank you for saving me a lot of pain when I called you last week.
What were you looking at?
RAD.
Oh, okay. Ooh, that was ugly, wasn't it?
It cratered yesterday for no reason.
Weren't we looking at 473, that low, when we talked?
Yes, and it was $2 higher when I was going to buy it.
Yeah, 669 or something back in there, yeah.
Yes.
Okay, well, that's good. Now,
we should very much, yes.
Yeah, except volume yesterday way, way high, so that's going to blow out that 473.
Okay, that's what I called for.
And like I said, I think when we talked, I said, hey, if it blows out that volume, gets into that candle with high volume, which has got 50 million today already, right?
Right.
It's probably going to go sideways for a little bit here at $5, but my guess is you're going to get it a good chance back at that $4 level now. That kind of volume out here has blown that apart. Now, you got very, very good support. What is that volume back on that day? 114 million shares. So now the risk reward with the volume yesterday means that you can't buy this thing until you get into that gap, and that gap occurred on September 19th, 2013. Have you looked at that?
No, actually, I looked at it. Yes, I have to.
That's the only safe place where this thing, where you can buy it now. That's going to be somewhere between 375 and 420.
Wow.
You'd want to get that half filled. So I'm going to say 395, if you get light volume, would be the buy point on this thing. And not a bad thing out here, because you probably could get 20-25% out of a trade if it does bottom at 390 or whatever, 395. So a lot of these things are like hunting animals. You just got to keep stalking them until. Have you ever been hunting?
Yeah, not really.
Okay. Well, if you've ever been out chasing deers, especially if you were bow hunting, you got to get really close to these things, and of course you got to be downwind from them, because if you're upwind, they're going to smell you and run. So there's a whole lot of positioning out there before you can get maybe within 30 yards or something out there, and maybe you get a gun and shoot them at 1.5 miles. But stock trading is probably a lot more like bow hunting. I mean, you got to have a huge amount of patience. You've got to find your quarry. You've got to get downwind of them so they don't smell you and they don't see you before you can get into a position where you might be able, if it comes your way, to take a shot. The problem here is the risk reward is so bad on anything above 390. I would say it's time for you to go hunt elsewhere. You know what I mean?
Yeah.
Okay. Now, deer season is going to be over for a while. Maybe, I tell you what, we're looking at the way that the market reacted today and how fast it sold off. This could be the spike we're looking for. We may get one more test, but I might tell you that you might be looking at some short plays out here in the next few days that would make a lot of money a lot quicker than getting into Rite Aid. I'd put your alarm on it, whatever you use for your broker for alarm, or Yahoo or MSN or whatever. I'd put an alarm on it at 395 and just quit looking at it and torturing yourself. You probably are out there. Just, I'm going to get it. I think you want it too much. You know what I mean? The old watch pot thing.
Yes.
Just let it come to you and don't get excited. On the street, if you're a broker that's kind of acting like you are, you know what they say? There's a saying. It says, change the name. And what that means is, go find something else. And, even if it gets down there to 395, with the kind of volume you see here today, it gets down there. It may take a month or so to base out at 395, depending on the way the volume comes in.
Yes.
So if it bases out there, bounces once, bounces twice, that may be a beautiful trade back up to 650. So, not a lot of stocks that you can make over 50% on back up to and fill that gap. So I'm not going to say that it's something you shouldn't think about. I just wouldn't think about it much in the near future. Find something else.
All right, sir. I'll take that to heart.
Okay. Anything else you want to look at today?
Yes, but it's EWJ, and I missed that during the crisis in Japan, and it is a solid ETF, and I just want to know what you think about that.
I tell you what, I was looking at another one out here today that's making me think. What are you thinking of shorting it?
No, not really.
You're going to be on the opposite side of the trade on a lot of stuff on me. I would be looking at the EDZ. I think this thing has made a big signal out here. And that signal is the emerging markets are weak. This thing has come off the bottom. I want to buy this thing if it comes back down here with light volume. So to me, we got what Wyckoff called the automatic rally. That is a rally without any preparation, a test of the low. It just came out of thin air, right?
Right.
But to me, I'm going to have a real problem with you buying anything in Japan if this emerging market Bear X doesn't look a little stronger. So before I would go long in that trade, I would certainly want to see that the EDZ weakens, which is the bear shares on the emerging markets. I don't know how Japan can go up without the emerging markets. Let me put it that way.
I see.
And that is problematic. But I think when you see these emerging market shares like this, it's another page in what Andy and I were talking about, which is these commodities look horrible, and emerging markets are all about commodities. We've got an election coming up in Brazil, and that could cause a lot of problems too. So I'm going to say I've got 3 positions now that are basically bearish positions. I'll probably have 12 in my newsletter, and both newsletters probably by the end of the week if we get any weakness. But we start seeing weakness on Wednesday, I would be putting on my bear hat on the show next Friday. I'll wear a bear hat.
Thank you very much for all your advice.
You bet.
Have a good one.
Bye.
Bye.
So, I was going to look at some of these other ones. I've got to shift my brain now. It's not easy. I think I was stuck in first out here. I wanted to see how some of these stocks were doing, and like I said, some of these stocks, especially these bulk shippers, at least they found some level of support on these high volume lows. When we look at Eagle, E-G-L-E, I've been watching this thing, and you would think that we would, with an incredibly light volume compared to the hammer down not too long ago at 102, that this thing would have raced out of here. And let's say the market does start going up, commodities start looking better, I'd want to look at it. But not a lot of juice in Eagle bulk shipping down here at these lows. The chart looks good, but like in gold, it just keeps dripping down lower. We've had a few stocks I've been looking at. I wanted to buy if they ever close back into the trading range. We'll talk about one of those when I come back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we come for the nice warm winters down here in Florida. I'm wondering, we got Tom O'Brien, of course, coming up in the next hour. I'm wondering how he's going to make it. It's about, he was freezing last weekend here. Something's wrong with the air conditioner. But I tell you what, it's 10 degrees colder today. So you may want to call in and ask for Blue Boy, because I think his teeth are going to be chattering by the time he gets through 2 hours today. Of course, I'll be in his second hour of the show. And we'll be talking a lot of technology, a lot of interesting stuff that Apple and Alibaba have covered over. So there's probably a little better opportunity to look for stocks moving on news that a great deal of people probably haven't seen. Of course, as always, I want to remind you that we've got the trading contest going on here at TFNN. We're going to be giving up 10 Gs. And someone told me you had to register by today. I guess you have to register by next week, by the 25th. But go ahead and do it. And just logging in during the contest means that you're going to be entered in a chance to win, what was it, $300 or $500? Well, I'm going to have to go back and look at that website again. But you do it for me. I don't know what it'll do to be tonight, as soon as you get some time. But you'll flip a switch on, or maybe you'll be parking the car ready to go into the house, and turn the lights off in the garage, and you'll just think, hey, Dave's voice is penetrating my brain and reminding me to sign up for that contest right now. And if you don't, my voice will penetrate your brain for all night. You won't get any sleep. So I'd say do it now. Or when you get home, before my voice starts penetrating even further. Anyway, we're talking about Eagle when we left out here in the last couple of minutes of the show. We're also talking about some of these other stocks that look, very interesting, that are up here on light volume. Energizer Holders was one, and not a whole lot in that today. We're just going to see a lot of these stocks aren't moving. We've got some that are actually making lows out here. But again, we were talking about, I want to know what we wanted to talk about. There were stocks I wanted to buy, but I couldn't because they closed below the previous low on lighter volume. But guess what? It didn't matter. They're still below those lower volumes. And I was thinking, maybe these commodities are going to pop back, and I would have loved to buy Molycorp whenever it stops going down. But my discipline is that if you break a low with lighter volume, you want it to close back above that previous low. In this case, this thing's down to $1.30 now. Probably far too low for me to use that as a low. But it's been down on lighter volume from the $1.61 of the July 10th low out here. This is the kind of paper cut market that makes it very tough. A lot of people say the volume's lighter on the way back down, but in the case of gold, in the case of some of these other commodity stocks like rare earths like Molycorp, there's just no stopping these things. Now yesterday we got volume, but even the volume is too low compared to that July 10th low, but it doesn't matter. You're at $1.30. I would have easily stopped out. Probably lucky this thing didn't pull back in the above that $1.61 level. But this is happening on a lot of stocks. Now, some of these stocks do look like they topped. J.P. Morgan. I'm not a big fan of shorting the financials that have their own trading floor and will put out news to screw you. J.P. Morgan and Goldman Sachs, though, these charts are looking pretty horrifically bad. J.P. Morgan testing with a 10 million shares today, a 35 million share high, back at $61.48, that March 25th high. A lot of low-hanging fruit out here. Anyway, remember to sell when you can, not when you have to. We'll see you 2 o'clock Monday, same bat channel, same bat time. See you then.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.